Hey guys, welcome back to the channel. There's obviously been a fair bit of panic in Bitcoin and the markets, more of the recession talks coming through. So what I thought today is I would put together a beautiful little agenda here where we can cover off a lot of the macro economic and market sentiment readings along with price and time action to potentially identify when the end of the crash is, or more importantly, when we start to see things boom. S&P 500 breakout to new all-time highs. That has happened for the last 12 months, right? Well, we've been breaking into new fresh highs and then into new all-time highs as it did in January 2024. And here we are. Again, higher lows continue to form on the macro chart here. Now, what I've got here for the breakout, new all-time highs, with the S&P 500, we're seeing similar pattern repeats for each of the previous Bitcoin cycles. For Bitcoin to pump up into those new fresh prices, these arrows pointing up are essentially the election months. They're your Novembers in each of the previous years, 2012, 16, and 20. Prior to that, this little arrow here is basically just pointing at where the S&P 500 broke into fresh highs in the case of 2012. And then in the most recent elections, 2016 and 2020, it broke into new all-time highs, had the pullback, election time, because there's an uncertainty in the market, and it seems like we're going through that again. Each of the times are different with different reasons for uncertainty, but the pattern basically remains the same. That's what it means. That's what I take from the saying, this time is different. Like, they're the four most costly words for an investor, because each time is different. It's different enough so that you can't see the patterns, I guess. But when you look at the price chart and the timing of things, it pretty much works out the same thing over and over again. But there's always different reasons. And most people, the vast majority of people, look at the news, look at news headlines, and they say this time is different. And I see that in the comments section, and hopefully you guys are paying some attention to those as well. Most of the time, people will say, well, you've forgotten about this economic thing, or forgotten about this news headline, or this time is different because whatever is going on now, Japanese carry trade, it's unwinding. It's unprecedented. We haven't seen a Japanese yen carry trade event happen before. Of course not. We haven't seen that happen before, but we've basically seen the same pattern happen every single flipping time. Maybe it'll be different this time. I just don't like playing that game to hope that it's going to be different when it's been basically very, very similar over the course of this bull market, and we're still in the macro bull market, and things will adjust in the downtrend of that, basically the collapse, the major collapse, which I still think is coming later this decade. That's as clear as I can make it. We're in this stage here where Bitcoin's pulling back, the stock market's also having its uncertain times, and then what I've seen before is basically Bitcoin price go up. So this is one of those things I think we need to see first, basically some more certainty and strength regaining in the S&P 500 to either break into a new all-time high or get close to breaking into it again. Basically putting in some swing bottoms and looking a little stronger here. Basically the higher lows, higher highs, and continue to find a little bit of strength there. So that leads us to the US dollar. Now, again, I've covered this in great detail. So all I'm going to say here is it looks like the US dollar is getting ready to break down again. It doesn't happen straight away. Of course, maybe overnight we get the breakdown of 100, and it actually does happen straight away. But what we've seen in the past is basically a consolidation, and maybe you do get a little bit of a bounce here. Maybe it takes weeks or months, but eventually I see this breaking down, and that's typical of the second half of the real estate cycle, where the US dollar goes on a longer downtrend, so a longer bear market than what it has done in the past. Now, with each of these moves, the US dollar has either consolidated or gone down for the move of the Bitcoin bull market. And then when the US dollar finds a fair bit of strength or is finding its ground here, that's pretty much where Bitcoin goes into its bear market. You can see again, Bitcoin's finding its ground here. That's the bull market of 2015 and 2017. Significant, very, very significant. $200 to 20,000. Doesn't look like it on the chart, but you can do it yourself on the chart or take my word for it. Up to you. You can see here that the US dollar was basically in a distribution phase before it broke down, and that was the Bitcoin bull market, the major bull market there. Other things were going on. You had plenty of different economic things that were happening. The election was in 2016 and then also led to that big boom. But I digress. I'm just looking at the moves of the US dollar in a broader sense, basically a bit more of a macro picture here. And if this is to occur, we get this breakdown underneath that sort of 100 to 101 level for mostly around 99 to 100 for the US dollar, then I think that would be the next piece of the puzzle to get this big major breakdown for the USD. The S&P 500 probably in that same sort of time frame I'm talking about now into Q4 will start to find its strength again. More certainty comes in the market. The election results are coming through. People are getting a little bit more feeling confident in the outcome as well. And then you start to see things flow on. And basically you need all of that money, all of that certainty come back in the market for the investors to get interested in riskier assets like BTC. It is still a risk asset, and that's how the market basically plays it at the moment. Seasonal patterns here for 2023. You got the July move down, August, September, into this final low in October. And again, when I was covering this on the channel, it's another piece to the puzzle that you can throw into your own trading. You got like 3 similar waves here in broader structures, and in the bear market as well, you've got roughly 1, 2, 3 moves to the downside over a longer time frame. But markets typically work in these sorts of patterns: 2 to 4 swings to the downside, and 3 is quite a common move to the downside here. So it looks like we're in our second swing to the downside, which maybe we do see a third that comes in to test the lows, maybe the second test the lows. The main thing I'm looking at here is how similar you can see these patterns where you've got this significant move down into some extreme fear, and then the market just needs to find its ground again with that extra certainty and then start to find its way higher. Still think that is going to happen, which then leads on to more money flowing out through the system to higher prices for the rest of the charts. Having a look at these extreme fearful times, you can see it comes up in the red, and then the orange is the fear. Each of these times, provided you're in a macro bull market, and like we've shown here with the 18-year cycle, the S&P 500, where the DX sits, and a host of all other indicators that I've looked at here, I suspect we're still in a macro bull market. Plenty of people would disagree. That's absolutely okay. Obviously, they trade their own plans. I'm just sharing with you what I look at here. Now, the extreme fear has happened at multiple occasions at many, many very good times to be chipping into the market or going degen and dumping absolutely everything into the market. I'll leave that up to you. But we're just looking here, look at the extreme fear and fearful times. What I'm saying here is the price range was from $6,000 to $10,000. You have to expect volatility throughout these markets. If you're going to look for major upside, there is going to be some major volatility. That is in the form of 20, 30, 40, 50, 60% drawdowns, which mean from peaks to troughs in that entire move. But to the upside, you've got hundreds of a percent. Will Bitcoin do it? I don't know for sure. No one knows for sure, not even Michael Saylor. So make sure you have a risk management plan in case things don't go your way. But the main thing here is every time you see these extreme fearful moments in the market, they have generally been relatively good areas to buy. If you can just avoid buying the peaks like the majority of people do, you can see that in the trading volume, you can see it in the search volume, you can see it in the price charts that they're all buying towards those tops. If you can avoid that, you're going to be in a much better position than the vast majority of traders or investors or hopeful traders and investors out there. So at least keep this as part of your toolbox for your trading, where you can see a lot of these extreme fearful moments typically are at the lows. Now this is a daily chart, so that is a long time to sit it out. People get bored, they get annoyed, they come to the videos, they just take out some frustration. That's okay. I guess I'm a psychologist at the same time, but that's 2 months there. We're now sitting in 6 months down from the all-time high. And the same thing is happening again, just like it happened last year, where it was basically 6 to 7 months of a trading range between $25,000 and $31,000 before it took off. Now, I've gone through some other patterns before, which I guess leads us to the fractals and the timeframes here. We can take a look at the 2019 fractal, the 2023 timeframe, And you can see the movements are quite similar. Looking at Kraken, you could choose the BLX, so the liquid index, bringing all of the data together. And I'm just watching the volume down here. I'm not overly concerned that the average is dropping off here for Bitcoin overall. I just want to look at where these major bottoms and tops are formed and on how much volume. So you see a lot of buying action coming in to the price here for January 2021, lower close, which starts to show some signs basically that the trend is wearing out. It went from 33, doubled, got to 64, 65K, then came all the way back down to that particular level. And then basically the volume dropped off on the way up. So essentially it was saying that it was a weak rally to the upside. Market started to come down and the volume increased, comparatively speaking, to that last rally up. So more volume coming in on the way down. And basically a weak rally again, lower volume, increased volume on the way down. And then each of these down bars started to show higher volume, but the price was stopping. So that's showing some sign that the price wants to stop out there, essentially stopping volume, which could potentially lead to a reversal. 4 hour, however, has given us a slightly higher higher highs, and the lows are still lower lows. So there might be something occurring here, but again, it needs to get back above at least the short term at 56K. And then on the longer term timeframes, we definitely need to see some breaks back above the 61.5K level. 61,500 is the halfway point through the consolidation range. So basically, Bitcoin's got a couple of things to do to get back into a longer term sign of strength. But for the short term, 53K is a good sign, $56,200, and then eventually that 61,500. I'll see you back at the next video. Don't forget to hit the like and subscribe button. Plenty more coming up while the markets are a little